Imagine waking up to discover that gold has surged past the historic mark of $3,600 per ounce and that silver has already broken through $40. This is not just a spike in prices. It is a silent warning that something far greater is unfolding behind the scenes of the global economy. And here at Tellnomics, we go beyond the headlines to uncover what no one else dares to explain. Every minute, billions flow across markets, yet the mainstream media prefers silence. Ask yourself, why? What is being kept from you? The truth is that a single $1 billion operation hit the GLD Gold Fund, the largest transaction in its history, according to Bloomberg data published in August 2024. At the same time, the GDX Fund, which concentrates gold mining companies, recorded a gain of more than 90% over the past year, as reported by Yahoo Finance in July 2025. This is not mere speculation. It is a structural rupture. For the first time in nearly 3 decades, foreign central banks now hold more gold than U.S. Treasury securities, according to the World Gold Council, in a report released in June 2025. And here begins the tension. If the heart of the international financial system was sustained by trust in the dollar, what does it mean when central banks themselves decide to shield their reserves with physical gold? Are we witnessing the early stages of a loss of faith in the U.S. dollar as the world's reserve currency? While most of the population looks only at headlines about price fluctuations, institutional investors and governments are building positions that could redraw the financial map of the coming decades. But the question that should echo in your mind is, why is no one talking about this? Could it be that revealing such a shift would expose the fragility of the current system? Could it be that admitting gold has returned to the center stage would destroy decades of narrative about the supremacy of the US dollar? And what if the quiet moves of central banks are just the first piece of a much larger chessboard? Prepare yourself, because this is only the beginning. We are facing a revolution that redefines not only the prices of precious metals, but the very logic of trust in money itself. The real question is, are you ready to see what is being hidden from you? Think about the impact of a single billion-dollar transaction. That is exactly what happened with the GLD Gold Fund, the largest operation ever recorded since the ETF was created, as Bloomberg reported in August 2024. The most intriguing part? Sources from the Financial Times suggested that the buyer might have been Saudi Arabia, possibly through its sovereign wealth fund or even its central bank. This is not just an investment move, it is a strategic decision. After all, why would a nation historically dependent on oil suddenly divert billions into physical gold? At the same time, new vaults are being built in strategic regions. In Shanghai, Hong Kong, Dubai, and even Riyadh, ultra-secure storage facilities are being constructed at an accelerated pace, according to data from Metals Focus published in June 2025. These are not ordinary warehouses. They are fortresses designed to stockpile what could become the foundation of a new financial system. And who is leading this movement? The BRICS countries, with China, India, and Russia accumulating reserves at record levels. The People's Bank of China alone added 174 tons of gold to its reserves in 2024, according to the World Gold Council. Now, consider the implications. If these nations are not only buying gold, but also building the infrastructure to monetize it, what does that mean for the U.S. dollar, whose strength relies precisely on being seen as the world's reserve currency? Are we witnessing the birth of a tangible alternative to the current system? And here is the detail that connects you directly to this transformation. When a sovereign wealth fund moves billions, the effects might not hit your pocket immediately. But in the medium term, this repositioning affects everything from the value of currencies to the cost of imported goods, from gasoline to the smartphone you use. Each gold bar stored in these vaults is also a vote of no confidence in the current system. The question is, if entire nations are preparing for this shift, should you continue believing that the dollar is unshakable? Do not expect the major broadcasters to tell you this. Here at Tellnomics, we expose the hidden mechanics of this silent revolution. If you truly want to understand what is happening, subscribe to the channel and like this video. What lies ahead could redefine the world order, and you will want to be one step ahead. For decades, silver was treated as gold's forgotten sibling, relegated to a secondary role in the financial imagination. But in 2025, that changed. The United States officially classified it as a strategic mineral essential for defense, energy, and technology, as announced by the Department of the Interior in May 2025. This decision completely shifts the game, because it means silver is now seen not just as an investment asset, but as a resource vital to national security. After all, how can you sustain production chains for missiles, solar panels, and electric vehicles without guaranteed access to silver? The detail few remember is that, in the past, the U.S. government once held more than 3 billion ounces of silver in strategic reserves. Today, that stockpile is virtually gone, and since it cannot be rebuilt without triggering a massive price surge, the question arises, has the United States already fallen behind in the race to secure a stable supply? Meanwhile, rumors are spreading that even central banks, historically focused on gold, are quietly accumulating silver. What could explain this historic shift? Beyond numbers, this touches directly on everyday life. The smartphone in your hand relies on silver to conduct energy within its chips. The electric car that promises to reduce emissions only works because each battery requires grams of the metal. According to the Silver Institute, the global supply deficit has exceeded 200 million ounces annually since 2022. In other words, the world has been consuming more silver than it can produce, year after year. Ask yourself, what happens when a strategic resource falls into chronic deficit? And here lies the contradiction that exposes the conflict. On one side, central banks are accumulating quietly. On the other, individual investors continue to believe silver is just a forgotten metal. But if even governments now declare it essential, who is truly lagging behind on this board? If gold and silver, once dismissed as relics, are becoming the backbone of new power strategies, what does that reveal about the future of the global financial system? For decades, gold and silver were controlled by an invisible empire, the paper market. Futures contracts, options, and derivatives created an almost unlimited supply, even when the physical metal was scarce. The logic was simple. If demand rose, Wall Street flooded the market with contracts, suppressing the price without ever touching a single gold bar. This mechanism reshaped global perception. Prices reflected paper speculation, not the reality underground. But that machinery, once seen as unshakable, is now breaking down under new international pressures. The sanctions imposed on Russia after 2022 marked a turning point. Countries that once trusted Western vaults to safeguard reserves began pulling their gold out of London and New York, with World Gold Council data confirming significant withdrawals in 2023. At the same time, the implementation of Basel III rules in 2021 made it more costly and risky for banks to store gold only in contracts, increasing the need for physical metal on their balance sheets, according to reports from the Bank for International Settlements. The East perceived this vulnerability before the West. China, for instance, actively encouraged citizens to buy physical gold, fueling an explosion of demand in the retail market. Vietnam saw long lines at exchange houses in 2024 when prices surged, as reported by Reuters. The message is clear. Paper promises no longer suffice for those who fear global instability. Confidence is migrating toward the tangible, the metal that can be weighed and locked in vaults. Now consider the contradiction. If for years prices could be manipulated simply by creating contracts, how does the system react when buyers demand real bars? The collapse of this paper-based model is not just a market crisis, but a crisis of confidence. And confidence is the true pillar of any currency or financial system. If the gears that sustained Western control are rusting, who will take command of global price setting? Are we facing an inevitable transition where it is no longer contracts that define value, but physical scarcity and the struggle for access? Tension is only rising. What comes next may redefine not just the metals market, but the entire architecture of the global monetary system. The game is changing before our eyes. For the first time in decades, the pricing of gold and silver is starting to break free from the grip of paper contracts and anchor itself in real supply and demand. Vince Lancy, a veteran metals analyst, stated in an interview with Metals Daily in June 2025 that we are witnessing the birth of a new pricing mechanism where physical metal dictates value instead of Wall Street's leveraged promises. This shift is already visible. Silver has recorded 7 consecutive years of supply deficits, according to the Silver Institute, with an estimated shortfall of 220 million ounces in 2024 alone. This chronic gap means that every additional bar acquired by governments or investors tightens the pressure on an already fragile market. And here's another overlooked detail. Funds like GLD, often viewed merely as speculative vehicles, can also serve as discrete gateways to physical delivery. Only institutions with billions in cash can access this feature, but it explains the silent capital flows we've seen in recent months. Instead of shocking markets with aggressive buying, institutional investors quietly convert paper into real metal, drawing little attention. Now imagine the scene. Newly built vaults in Hong Kong, Shanghai, Dubai, and even Riyadh receiving shipments in silence, while everyday investors continue to believe this is nothing more than temporary price swings. What is happening is far deeper. It is a silent reorganization of global monetary power, being built brick by brick, bar by bar. And here comes the inevitable provocation. If gold is already moving in this direction and silver is following closely, how will Western financial institutions respond? Will they remain trapped in a paper system doomed to collapse, or will they be forced to shift into physical holdings in search of legitimacy? What will happen when this movement is no longer invisible, but explicit, plastered across every headline? The world is no longer debating mere speculation, but structural transformation. And when that becomes undeniable, it will be too late to act. And what if I told you that for years, silver was deliberately kept cheap as part of a hidden favor from the United States to China? This is the thesis put forward by analysts such as Eric Young, published on investing.com in April 2025. The logic is straightforward. Silver is irreplaceable in the production of solar panels, semiconductors, electric vehicles, and fifth-generation network infrastructure. By keeping prices low, the United States indirectly benefited China's industry, which dominates these supply chains. But in a world of escalating trade tensions and tariff wars, that favor has ended. The proof came when the U.S. Department of the Interior officially reclassified silver as a strategic mineral in May 2025. This marked a historic turning point. The metal is now considered vital to national security, alongside minerals used in defense and advanced technology. At the same time, the International Energy Agency had already warned in 2024 that demand for silver in the solar industry would surpass 300 million ounces by 2030, amplifying the risk of shortages even further. And here is the shock. Despite these warnings, major Western institutions still hold less than 2% of their portfolios in gold, and almost nothing in silver, according to World Gold Council data from June 2025. In other words, the planet's largest asset managers continue to ignore a market that could erupt at any moment. What happens if they finally decide to allocate significant capital into precious metals that are already in deficit? This is the micro-conflict that exposes the system's fragility. On one side, central banks and governments quietly hoarding gold and silver. On the other, Western institutions still clinging to the narrative that the US dollar is irreplaceable. But how long can that confidence survive in the face of limited stockpiles, rising demand, and intensifying geopolitical tensions? The stage is set for a radical turn. What lies ahead may not simply be an explosive price surge, but a complete reconfiguration of the foundations of global economic power. We have reached the critical point of this investigation. Gold above $3,600 and silver surpassing $41 are not just numbers on a trading screen. They are signals that global confidence has shifted direction. According to the World Gold Council, central banks purchased more than 1,200 tons of gold in 2024 alone, the highest volume in modern history. Meanwhile, the Silver Institute confirms consecutive annual supply deficits since 2022, revealing a shortage already pressuring the energy, defense, and technology industries. These figures leave no doubt. This is not a passing wave of speculation, but a profound restructuring. What we are witnessing is the silent remonetization of gold and silver. Governments are building vaults across Asia and the Middle East. Sovereign wealth funds are converting paper into physical bars. And the United States, quietly, is trying to safeguard its supply chains by reclassifying silver as strategic. Each of these moves points to the same conclusion. The monetary system built on paper promises is giving way to a model anchored in tangible assets. This does not mean everyone should rush to buy precious metals, but it does force a reflection. If even central banks are repositioning, what do the elites know that the public has yet to understand? This is where the viewer must ask, are we merely witnessing another market rally or the birth of a new financial order? History suggests revolutions are never announced in headlines. They unfold in silence, behind the scenes, until they can no longer be denied. And when that moment comes, it is always too late to react. At Tellnomics, our mission is to reveal these shifts before they become obvious. That is why, if this content resonated with you, subscribe to the channel, like this video, and share it with someone who still believes gold and silver are just shiny rocks. Thank you for staying with us until the end. And here is one final thought. Every great transformation begins as a whisper. And today, that whisper is etched into the price of gold and silver. The question is, will you ignore it or will you prepare for what is coming?